Already we have 7 attendees. We had like about 80 people registered.
Okay.
Yeah. So, and already we have 17 people attending, and some people will come in. Yeah, because we announced it like I think Thursday or something like that. So it was a little late.
Yeah.
Um,
Are you gonna email out the deck to everyone?
maybe I might. What I might do is I might. Okay, hi room. I know you and I are talking, and the room is sort of like already getting filled up. So hey, room, welcome. Let me just share what this is about. And we are here on the 2017 Taxes and Airbnb. And oh my God, look, somebody wants to, my upcoming guest wants to call me now. It's always so funny. It's like, I was just doing a Facebook Live and a guest literally was interrupting me because they got locked out. It always happens. So, host, we are going to start really quickly because we have a lot of information to provide you. I'm here with Derek Davis, our in-house. I wish it was my in-house CPA. Um, this is our third year with Derek giving us all of his in-house information. He's a CPA with Share Economy. He has been the Share Economy CPA for a bunch of different freelancers and Uber drivers and Airbnb hosts, and we're just waiting for the room to fill up. We have hosts from Chicago and hey, Kim from Puerto Rico and Christy from San Clemente. This is mostly United States hosts because we are mostly talking to the United States. We don't really do taxes information for the world. Um, I wonder, how much of this information translates, Derek. Do you ever get calls from hosts from the rest of the world?
Yeah, I got a call last night from Canada.
Oh, really? And were
Yeah.
you like, hey, it doesn't work?
Yeah, so I try to help everyone to the best of my ability, but um,
But you're like, I
yeah,
don't know, I don't know Canada laws.
yeah, we know a little bit of Canadian tax law, but we try to just focus on the U.S. just because once you go international, it's just like it's a totally different story.
Exactly. So we're just gonna wait for one more second. In the meantime, you know what, guys? Something fell here in the house. Let me just give you guys the delay of share the screen, tell you guys who we are in the meantime. I am sharing the screen and I just want to make sure everybody can see it. Can you guys see? I see Layla, Marie, and Christy and Kim. If you guys host, dear host, please make sure, let me know that you see the screen. That's right now the pretty folders with saying yes. Okay, perfect. So you can see it, you can hear us. All right. So just to let you know, this, like always, this is not an Airbnb event. We're not affiliated with Airbnb. They don't pay us. They don't know us. Well, they do know us, but they don't pay us. They don't sponsor us. This is not them or anything like that. Please no multitasking. Yes, you could tell people from Facebook, hey, yes, come on over, get some information and everything else, but we would love your attention. Um, like always, the information contained in this website is meant only for guidance purposes and is not professional legal or tax advice. We do not provide personalized legal, tax, investment, or any business advice in general. For professional consultation, please visit shareeconomycpa.com. Hire Derek, so he could give you, everything will be, hire him or a legal advice, don't hold me accountable. All right. So this is tax strategies for Airbnb hosts for 2017. Because things changes. Derek, talk to the community about you?
Yeah, for sure. Thank you for the awesome introduction. So I've been in the space now since 2014. We've helped, I'd say maybe on like a just initial consultation, just chatting, we've helped at least 1,000 hosts, and we have maybe between 250 to 300 Airbnb specific tax clients spread throughout half the United States. There's generally a big emphasis of hosts in major metropolitan cities, but that doesn't necessarily confine us. We have clients in real random places: Idaho, Wyoming, North Dakota. So pretty much the full range of gamut in terms of hosting, and we primarily focus on tax compliance as well as tax preparation. So this time of year is pretty busy for us. So we'll quickly go through the deck, and then thereafter maybe we can do another 10 to 15 minutes of live Q&A for any types of tax questions that I can help you guys with.
Derek, they're asking where are you located?
So we are physically in San Diego, Las Vegas, and Orange County. We have a virtual team, so we're spread out throughout West Coast.
Okay. And now I know that the thing got. Let's see if I move it. Ta-da! No, it got kind of interesting that it got. Okay, so my name is Evelyn Badia. I started hosting in 2010. In 2012, I started becoming an Airbnb activist. I've been doing this for a long time. I became a host educator in 2015 and 2016. And I also started the Facebook group in 2016. And I started coaching the hosts since 2014. But this is not about me. This is all about taxes. So we will be talking, or Derek will be speaking about Airbnb taxes and you, money, 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 and then your Qs and our A's. So Derek, take it away.
Perfect. Okay. So let's see. So some big changes that happened last year, which affect this year and all future foreseeable years, is not everyone on Airbnb gets a 1099. So people that do get 1099s generally make more than $20,000, as well as had over 200 transactions. So that is over, I guess, think about it this way, over 200 stays, different people that is, or separate transactions. The only caveat to this is if you did not file your W-9, and so what a W-9 is to receive a 1099, then Airbnb may withhold some taxes from you, and under those circumstances, then they will issue you a 1099. For those of you that use your car to either go to the store, say either Home Depot, Target, Lowe's, to purchase anything related to your Airbnb, the standard mileage deduction was reduced to 54 cents per mile. So each time you drive to and from the store for your Airbnb, always make sure to track those miles, because you can absolutely write that off. And it's important to remember that the amount that you can actually take home is 54 cents per mile. The ACA, the Obamacare penalties, I believe they've capped out this year. So, if you don't have health insurance, make sure that you do get it going forward, because the penalties are pretty bad. Oftentimes we've seen our clients' ACA penalties of upwards of from 500 up to a couple thousand. So if you do not have health insurance, make sure to get it. So a 1099 tax form is specifically used for independent contractors. So as Airbnb hosts, you all are independent contractors. So what I mean by that is that Airbnb does not withhold your taxes. And it's really important to remember that, because if you made, say, $30,000, $40,000 of gross 1099 income from Airbnb, you're expected to owe tax on that amount. The worst situation I've ever heard of from an Airbnb host was about 2 years ago. There was an Airbnb host who had a a listing actually in New York City, but during the entire year he was in Paris, doing the Paris thing, and he made about $70,000, and he didn't put $1 aside for taxes. The other thing that really kind of hurt him was that he also didn't keep track of any of his expenses. So, I briefly ran some preliminary numbers, and it looked like he was about to owe, I think, anywhere between 10 to 14,000 in taxes. And so he was so scared that he just said he's not coming back. But for those of you that live in the U.S. and want to stay in the U.S., always make sure to, one, claim all your income, and two, keep track of all your expenses, because that's the best way to pay less tax. So here is a sample 1099 tax form for those individuals that are making over 20,000 and have over 200 transactions. What's really important to note on this form is that on the form, it has your social security number. So Airbnb will send you the 1099 as well as a 1099 to the IRS. And it's really simple for the IRS, and all they do is they just match your social security number with what was reported on the 1099 as well as what was being reported on your return. And if those two numbers don't line up, then you'll automatically get a letter from the IRS. So say, for example, Airbnb reports 25,000, but you report 21,000, you will definitely get a letter asking you to explain the discrepancy. On the flip side, Airbnb sends you a 1099 for 25,000, and you put 30,000 on your return, they will not send you a IRS notice specifically for the income. So always make sure to always have the numbers at least lined up, or have it a little bit higher than what's being reported. If you do bookings outside of Airbnb, bookings.com, TripAdvisor, VRBO, Roomorama, HomeAway, blah, blah, blah.
I remember you'll get this is what you stated before, Derek, that you get a 1099 only if you get 20,000 and 200.
Correct.
And this part is where you will find your that even though, and Derek, even if you don't get a 1099, you still need to report your earning income, right?
Yeah, so that's a really good point to bring up, which is if you made, say, 10, 15,000, you still need to report your income. The statute of limitations, which is a big word for when can the IRS actually audit you. And if you don't report your income, they can audit you at any time. But if you do report all your income and you're a little bit kind of fuzzy or gray on the expenses, they have 3 years to catch you. So if you report 10,000 in income and then $9,999 in expenses, the IRS has 3 years to audit you on those expenses. But if you don't report the 10,000 in income, they can audit you at any time.
So, for example, guys, if you don't get a 1099 because you did not make the threshold of the 200 reservations, right? So let's say you made $20,000 in the income, but you only made 100 reservations, or you made $10,000 in income, right? But you didn't get a 1099. So you said, oh, I'm not getting a 1099, so I'm not going to report this income. The IRS can still come after you later on. Okay, so you still need to report that income. Don't think that because you did not get a 1099 that you should not report the income. Okay, so my recommendation is report the income, report the income, report the income. Just because you did not get a 1099, don't hide the money. Okay, and this is where you find it. So you go into your account, into the earning summaries, and this is how it looks like. This is mine. So you go into earning summary, and then I'm hiding my money, guys, from you. Yes. It goes, all the information will be here. So it will go like the payments account, the gross earnings. It includes the amount, the Airbnb service fee, which you will then deduct that Airbnb service fee onto your expenses. All right. So remember that Airbnb service fee, that 3% will be included there as total paid. Okay? So that's included there, which you will then deduct it out as part of your expenses. Derek, we have a question. Somebody's asking, Bets is asking, what if you use cash accounting? The numbers will be different.
So everyone's generally on a cash basis. As host,
can you explain what cash basis is?
Yeah, for sure. So there's two types of ways to report your income, either cash or accrual. Cash means that you record your income and your expenses when you pay cash or you receive cash. I generally have never really heard of any host using an accrual-based method of accounting because it doesn't really make sense. Because for hosts, you record your income when you make it. So if you have a guest that stays with you tonight, they pay you $100, then you record that as $100 of income today. And then with accrual, I don't really want to go into it because it's a little bit more confusing and it's really not relevant for hosts.
Yeah, I mean, because the whole thing is like, I mean, you made the booking, you might make the booking today, but the guest, you actually earn the money when the guests stay in your space.
Yeah, so for, I mean, if you want to do a quick example on accrual-based accounting, the host pays you today $100 to stay in your place a year from now.
But that will be that will be not with Airbnb because Airbnb doesn't do that way.
Exactly. So
that's sort of like if you're using if you're doing like some sort of like if you're doing on your own website and you're taking ahead of like sort of like you're getting advanced payments and things like that. That will be that kind of accrual, right?
Yeah, so in an accrual-based method of accounting, they pay you $100 today to stay in your place a year from now.
Exactly.
So you don't report that income until next year. But really, like that never really happens. People pay when they want to stay, which is usually, a couple weeks to a month out. And Airbnb only deposits the funds in your account after they stay and once they charge the host. So, it really, for short-term rentals, unless you're doing over $1 million in sales or bookings, it's really irrelevant.
Yeah. Okay. Charlotte had a question. Can you repeat about the insurance and the penalties? And this has to do with health insurance, right, Derek?
Health insurance. Yeah. So if you don't have health insurance, there are exemptions, like you were in prison or something like that. But generally speaking, if you don't have health insurance, they will assess a penalty based on how much money you made. So, this went into effect as of 2 years ago for the 2015 tax season, but ACA went officially into effect January 1 of 2014. So
this has to do with the Affordable Health Care.
Yeah, Affordable Care Act.
Okay. But that's not when you get the cash. But saying that's when you earn, but that's not when you but in Airbnb accounting, they should cash paid on the day they send the money, which is not the day I receive the money. But you actually is when you receive the money is you actually when they send the money is when you receive you basically receive you receive the money basically when they send it. It's actually like 24 hours after they send it. Christy is asking, can you deduct property insurance or the $1 million policy insurance? Okay, why don't we leave the questions towards the end so we could just continue with the can we do the questions towards the end? I'm just marking the questions so we could just continue with the presentation. So this has to do with, this was all about the earnings and the W-2s and where you could find them and your earnings. So basically, guys, remember that even though you might not get a 1099, you still need to include your earnings on your taxes. All right. So the second part of the presentation is money, money, money. And check it away, Derek.
Yes.
Schedule E.
So unless you have a guest that stays longer than 30 days at a time, more oftentimes than not, you have to put your income and expenses on Schedule E, or excuse me, Schedule C, which is subject to self-employment tax. Schedule E is not subject to self-employment tax, but there's special rules on what you can and can't deduct because it's considered passive income. So if you're kind of in that gray area of which form, the IRS has come out and said that there's something called a material participation test, and there's a 7-point test or 7 questions to run over to see if you are actively engaged or not. But broadly speaking, you're generally a Schedule C tax filer. On the screen right now, the points listed out are things to consider if you are kind of on that gray line of maybe Schedule C or Schedule E. Schedule E is historically used for long-term rentals. So you rent out your place for a year. You have an actual tenant that stays there. Then all your income and expenses go into Schedule E. The cool thing about a Schedule C, however, is if you have a loss, you can net some of those losses against other active income. So say, for example, your first year of running Airbnb, you had a loss because you purchased a lot of furniture, and your net loss is $2,000. If you have W-2 income that has withholdings, you get more of your withholdings back because it reduces your overall effective tax bracket. So there are some pretty cool things about going on Schedule C to consider that goes beyond just having to pay self-employment tax. The two kind of biggest distinctions is Schedule E has no self-employment tax, whereas Schedule C does. Schedule E, however, there's special rules and limitations on what you can net against your other income, but Schedule C, you can net it against all other active income. So in my example of your $2,000 Airbnb loss, if you're also a rideshare driver, for example, you net those losses on your Airbnb against your rideshare income. So it's pretty cool.
And this is keep track of your business expenses, and then this is the scenario.
So the reason why we keep talking about keeping track of your expenses is because in these two scenarios, you'll see on the right-hand side, there is someone who does keep track of their expenses, whereas the person on the left-hand side does not keep track of their expenses. So you can see the person on the right-hand side is only paying around $1,700 in self-employment tax and personal income tax, whereas the guy on the left-hand side is getting hit with almost $8,000 in taxes. What happens is, if you look on scenario 2, you're in a much lower tax bracket. You're in the $10,000 tax bracket. So everything gets substantially dropped down, both your self-employment tax, but also your personal income tax, and which tax bracket you fall under. So, reducing your Airbnb income, the taxable income, has huge effects on your overall income tax return.
Sorry about the form. I did fix it. Darn it. Bad form. All right. So tax deductions, this next. Yes, Cheryl, and I will fix that pretty form there. I will share the stuff. Yeah, don't worry. I will share the screenshot, the presentation. Go ahead, Derek.
Yes. So business expenses, broadly speaking, are the costs that go along with your trade or business. The key caveat is that your business is operating to make a profit. So, I guess definitely during tax season, anywhere between 2 to 4 times a day, people reach out to me asking what can and can't I deduct. And the key thing to think about in terms of deducting your expenses is, how does this relate to my short-term rentals? We have a lot of clients now that are going international. They're looking at properties in Cabo, London, Vancouver. And so when you fly to and from these different places, clearly show that you're talking to real estate agents. You had bookings or places that you want to specifically check out, and then you could definitely argue that these are all deductible expenses. if you get bottle service in Las Vegas, that's certainly not tax deductible because there's nothing really relevant to your Airbnb, unless, of course, you try to meet with potential hosts. But even under those circumstances, it's still a lot harder. However, if you go to Cabo San Lucas and you are actively talking to real estate agents to, expand your Airbnb properties, definitely include those expenses.
But you're snorkeling.
Yeah.
Is that your? Are you trying to figure it out if snorkeling and scuba diving is going to be part of your deductions? Will that be deductible, darling?
Snorkeling, I mean, that's going to be a little bit harder unless you want to try to say that, you're thinking about including snorkeling a part of your package of your Airbnb property. And so you wanted to try out different programs to see which was the most enticing. I mean, you could definitely try to argue that. Whether the IRS agrees with you or not, that's another story. But the more documentation and the more that you can clearly tie it back to your property, the better defense you have.
Okay.
So the two criteria that the IRS generally states is to deduct an expense, it needs to be ordinary and necessary. So what is ordinary in your industry? New bed sheets, new linens, bathroom supplies. What is necessary? Having a house cleaner come and clean your place, because no guest is going to want to stay in a dirty bed. So, when thinking about ordinary and necessary, you just have to always tie it back to your Airbnb property.
Mm-hmm. Now, let me ask you a question. Do you need to give 1099s to your cleaners and things like that?
Generally, yes, you do.
But it's so hard to give 1099s to them.
Yeah, so what happens if you don't give a 1099? That's always a common question that we get. If you don't get a 1099 and in the unlikely event that you get audited, the IRS will say, okay, you made $7,000 in payments to this contractor, where's the 1099? And if you can't show it, then that's how you get penalized.
And what's the penalty?
It can be a few $100s per 1099.
Okay.
So obviously, food and beverage for guests, that's all deductible. Those are all great things. Common overlooked things are supplies, cell phones, utilities, Netflix, HBO Go, any sort of entertainment, new televisions, new couches. And then, more common things is rent or depreciating your property if you own it, electricity and utilities, and, broadly speaking, anything else that relates to your Airbnb.
Okay, thank you. And that is it for right now. We are ready for questions from I've been tagging questions. So let me just go in here. From Christy, we have, can you deduct property insurance or the $1 million insurance policy? Christy, I imagine that's because you got a claim from, I don't understand the question. Derek, that's the question.
Yeah, so let's see here. With regards to a lot of the property costs, you have to proportionally allocate it based on days available for rent. Whereas utilities, you generally can only want to allocate that based on the actual days rented out, because, if your place was rented for 30 days but you didn't rent it out once, it's really hard for you to deduct the utilities if you also live in the property. So with regards to all those nitty-gritty allocations, generally the two allocation factors are either days available for rent or actual days rented out.
But what about insurance? How can you go about deducting insurance and things like that?
Yeah, for sure. So if you had to specifically purchase additional insurance for your Airbnb, then you want to make sure to deduct that against your Airbnb income. So broadly speaking, for everything, you always want to deduct against your Schedule C or Schedule E income. Putting it as an itemized deduction won't help you because there's certain phase outs. So phase out is the IRS saying you can't deduct all of that. But when it comes to your Airbnb, it's a lot more liberal.
Nancy is asking, and I'm repeating the questions because one of the complaints I've had is that on YouTube, they don't view the questions. So people were like, oh, can you repeat the questions? Because they don't get to view them. We have cleaners and a manager who does a walkthrough. How do we report their income? What forms do we need to file for them? I imagine you had to have a W-2 in payroll, right?
Yeah, if you have them on payroll, then it's, you have your I-9. If they're a contractor, it's a W-9 that you have them fill out.
Yeah. Or if they're contractors, then 1099 or something like that, right?
Yeah, and then you have to issue them a 1099 MISC if you pay them over $600.
Cheryl is asking, can you switch between Schedule E and C, and can you file both in the same tax year?
You can definitely file both, but you make sure to follow the rules. Sorry, someone's calling me.
Somebody's calling you. Cheryl's also asking, will we be able to see the slideshow? Yes. We do not live on site, but this is Kristen. We don't live on site, but we are at our site all weekdays and some weekend days. Can we deduct driving to and from?
Any miles that you have, you want to just be able to show that it was specifically for the benefit of your Airbnb business. So, for all those nitty-gritty details, you just have to say, when you're deducting those miles, I drove from point A to point B, it was 50 miles, and I had to do it because of X, Y, and Z.
So let's say, for example, if you go, if you have an Airbnb, like let's say, for example, you go, it's your weekend house, but you also rent it out. And as part of like, oh, I'm going there for the weekend, but I'm also going in there to check it out, and I'm making sure that if there's any maintenance and things like that, can you deduct the trip going there? Because you're also doing maintenance, but you're also there for the weekend.
Yeah, so with regards to those miles, it gets a little bit more gray. So, if you're going there personally, then don't count those miles. But if you're going there for your business, then count those miles.
How can you?
It's basically the honor system.
Okay. How honest are you? Cheryl is saying, I still need to check out Airbnb practices in Hawaii this time of year because Seattle is great. And Marie's saying, pay self-employment tax even after you're collecting Social Security.
Yeah, so that always is a huge issue. We have a lot of clients either on Social Security or Social Security is something that you paid into. Unemployment gets a lot more gray because you're going to be reporting Schedule C income, but you're obviously making money. So unemployment is a little bit more of a tricky issue.
Okay, so basically, talk to your accountant.
Yeah.
Cheryl is saying, is there an amount I need to reach for payout to a cleaner before I need to do a 1099?
$600.
$600, yes. At Bates, it says $600 is the answer. It's also the question about what's the minimum. Cheryl is asking which item that I could write off now could impact my capital gains down the road when I sell my house. Specific percentage of house used by guests, write off of my house office.
Yeah, so depreciating your property, you get the tax benefit now, but you may have to pick it up later as a capital gain. I still think at the end of the day, though, it's you're getting the tax benefit now, which opens up your cash flow, and if you want to invest in new properties, you have the money. So yeah, you may have to pay capital gains later, but you free up your cash flow now to expand your Airbnb if that's if you want to grow your business.
And then she's also asking, how do I calculate the percentage of house used by guests? I rent 2 bedrooms in a very small 3-bedroom house, 965 square feet. Guests use all of my house except my bedroom and my office and a few shelves and storage throughout the house.
So only calculate the space that's used for Airbnb and disregard the space that's personally used.
Yeah. And Cheryl, I have a three-floor house, and what I do is we split it into um, we calculated as 2 floors are used by the guest and 1 floor is mine, even though the guests still use the kitchen in one of my floors. So we just split it, you know, two and I use one. So I kind of have the same sort of thing. Um, Jack is asking, how do you I carry over losses work? I had a lot of setup costs my first year and I file under Schedule C, but my overall income is above the threshold, so I cannot net losses from my Airbnb rentals against my income for the year.
Yeah, I would have. That's a little bit more. I'd have to look at his return, look at his net operating loss, what was claimed. I'd have to do a little bit of digging to actually provide an answer to that one.
Jackie, talk to the accountant, call Derek. Isabel, I have a question about business use of home deductions. My understanding is that you can only claim it if your profit is 0 or above, not with the law. So if you're claiming business use of a home, you cannot claim it. You cannot claim a loss, right?
I'm sorry. What exactly is the question?
It's Isabel. I have a question about business use of home deductions. My understanding is that you can only claim it if your profit is 0 or above, not with a loss. So if you're claiming a business use of a home, you cannot claim a loss. Is that right?
So that's something that recently came out by the IRS, and it's a little bit contradictory. And they haven't had any court precedent rulings on it, but they're pretty much saying that you can't, your expenses can't exceed your income. However, it's a contradiction because any other business that's subject to Schedule C self-employment tax can claim a loss in their first or second year. So while we did see that on the IRS's website, it is, you know, it also kind of comes down to how you classify yourself. Are you a rental host? Is this rental income, or are you a property manager? So in terms of your classification, it also is a little bit gray with regards to that. But why it's contradictory specifically is because the IRS is saying, hey, we're going to slap self-employment tax on you, but on the flip side, you can't claim a loss like any other business could. It's like, well, what the heck? Like, you know, you want to load on extra taxes, but you know, you're not letting me claim a loss like any other business could. So I don't know. I personally really disagree with that, and I'd like to see some sort of tax court ruling come out that better clarifies that, because that's a massive contradictory.
Somebody needs to be a case.
Yeah.
Okay, so Angela says, I heard you can deduct a meal at a new restaurant to check out as part of your concierge services. Is that true?
Yeah, I mean, again, you know, the tax rules are liberal, but you just have to show how it relates to your Airbnb.
Yeah, I mean, because I'm always trying out like new places and new things. What I do is I have a separate credit card just for my Airbnb. And I try to keep all the expenses that are Airbnb related on that credit card.
Yeah, for sure. I mean, my recommendation would be is keep track of every expense, right? And you know, when you then give it to your tax preparer, have them go through the expenses. But on the host side, just keep track of everything.
Yeah. Patricia's asking, how do you know who is a contractor versus an employee?
There's generally, you could do a quick Google search on it, but there's a, you know, a several, you know, there's some criteria that you have to go through to determine whether it's an employee or 1099 relationship.
Yeah, I mean, there has to be like, I worked always as a freelancer, but there's certain things like you have to work at a specific place, you have to have certain hours. But there's certain, if you check on the Department of Labor, they have certain rulings, certain text that you have to follow. But there's certain, and they're very strict nowadays because everybody was like, oh, you're a freelancer. And they wanted to avoid that because everybody was trying to like be a freelancer and they're not. So you have to be careful with that. What if you own what if you do your own housekeeping? Can you deduct paying yourself for the time you spend in the same way you deduct for someone else? That's a good one, Jason. Can you?
No, because it as income. It makes no sense. We get that all the time. It's really stupid, actually. I mean, obviously, no offense given, but it's like people are like, "Oh, what if I pay myself $100 to like, and I can write it off, right?" And it's like, yeah, but then you have to go claim it back again on your return.
Then you have to pay yourself a salary.
Yeah, and then you're just claiming it again.
And I used to pay myself a salary, and it kind of sucks because I have an S corporation. I have a couple of different entities, and I will be double taxation myself. Believe me, it was like because I was whatever. It was so it's like I pay myself a salary, so I tax myself, and then I pay self-employed. Yeah, it's a mess. My husband uses a mileage app called MileIQ, and it's hooked to his Prius, and he documents each drive. The app is like $5 per month. There. Jason, can you write off end of year tips to doormen and the building since they allow access to guest check-in?
I don't know. I probably wouldn't do it unless you're okay with paying them a 1099, depending on how much you pay. But I mean, tips generally aren't.
Yeah, how can you deduct that? Ooh.
Yeah, I mean, if you're giving him a couple bucks here and there, I mean, your deduction is. I mean, it's not going to change anything if at the end of the year it's like $24 in tips.
No, it's going to be more than $24. Come on, look. If you given, it'll add up.
I mean, if that's the case, then issue him a 1099. Get him to sign a W.
You're not going to give a doorman a 1099. Come on, Derek. Oh, come on. I'm giving you $500 in tips, so here's a 1099. But you're definitely giving them a couple of $100 a year. I mean, just think about it.
Yeah, so I just saw his last comment. He said $800, so that hits the $600 threshold. So.
But you're not going to give him a 1099.
Yeah, but if you get audited and the IRS said, okay, you paid this contractor over $600.
But they're not a contractor. They're doormen. They're tips. Because it's not just one person. We're talking about doormens.
Yeah, but we're talking about the IRS here. Like, they don't, like, they're like, assume they're clueless and they don't even know what's going on, right? All they're going to see is payment to homeboy for $800. Where's the 1099?
Yeah, but it's not just one person that you're paying. It's doormens. There are many doormens.
I mean, you can definitely try to.
Exactly. I mean, like Jason is saying, there are like 10 of them. Yeah. You know, different shifts, different people.
Yeah.
Gifts cannot be accounted as expensive. Yes, they are. Look, like wines that you give to your guests, they're definitely accounted as expenses. The chocolate, put them on a credit card, people. Credit card. Keep credit cards. Credit cards. Do not pay cash. Expenses. And Amazon. Keep everything on just, don't use cash. So how will gift to a doorman be different? Yeah, because you're giving him, or give them Amazon cards. I don't know what to tell you, man. Can it be Amazon cards?
If you're giving gifts, it's subject to $25 limitation.
Yeah, but he's giving them tips because they're allowing the guests coming in. And I imagine, Jason, that if you tipping your doorman, I hope you're not in New York, because then, and if it's, I hope it's not a private apartment, because then you're just in bigger trouble than all of this. I got a guy that helps with lawn stuff and I have him. Okay, I'm sorry. This is Shelly. Let me read the question. I got a guy that helps with lawn stuff, and I have him give me a written receipt for the cash payment I have. Give him. Is this a correct way to do this? The problem becomes that if it adds up to more than $600, and you don't give him a 1099 for you to deduct it on your taxes, you have to give them a 1099. That's the problem. I'm having the same problem with my cleaner. Believe me, I don't give her a 1099, and I know I spend more than $600 a year on her. And I feel horrible not giving her a 1099, but I don't want to give her a 1099 because I don't want to, it's like, it's like my handyman. I don't give him a 1099, and I spend more than $600. I just spent $1,000 fixing a bathroom. And he's not, he's not a 1099 guy, and he's not a company. He's a guy. So I don't spend over $600 on him. In a year, you might. Believe me, money flies. Money flies. I mean, unless it's just seasonal, so you might not spend $600 on him. But if it's a summer, if you have summer year long, like if it's just seasonal, I understand. But look, cleaning lady alone, I have already spent on my cleaning person, and it's just like been 2 months, like at least a couple of $100. She's coming tomorrow, and she's coming the next day, so I know like this week alone it's gonna be a couple of $100. Layla is asking, isn't it different because it's a handyman or landscaper? Derek, we're putting you on a spot.
No, it's irrelevant. It's just an independent contractor.
Darn you, Derek! Darn you!
Already.
Really? We have to give them 1099s?
Yeah. I mean, they're independent contractors.
Okay. 1099s, they are. Okay. All right, guys, let's say thank you to Derek. He just gave us some news.
Hopefully not bad news.
Just news, Derek, just news. We love you regardless.
That's good.
Water over all the way. Let's get ready for tax season. Thank you, Mr. Derek. Jason, that sounded so proper. I'm not that. We're not that proper, Jason. I will see you guys at the hosting journey. If you guys have any questions, contact Derek. You can find him at where, Derek? Where can they find you? And by the way, go ahead. Where can they find you?
Oh, Shared Economy CPA.
Yes, Shared Economy.
We also have a ton of free tax resources on there if anyone has any questions or anything.
And by the way, follow the rules. Don't get audited. Exactly. Oh, by the way, I got audited. Oh, yes, I know. Enjoy Cuba. Oh, God, man, guys, Cuba's going to like kick my butt. You have no idea what I'm going through. So I'm going to Cuba, and the person that was going to take care of my house is stuck in Miami. He has a family emergency. So I've spent the day planning plan B of who's going to take care of my house because I have guests coming while I'm gone. So it's becoming like a little bit of a crisis. But something that's going as a deduction too, if you buy it, is my house manual. So buy the house manual. So it's a deduction. Go to the Facebook group, go over there, find out your deductions, and tell everybody that if you hire a cleaner and you pay them over $600, oh, Derek, to find Derek. Oh, Share Economy. Derek, what's your URL?
I'll type in.
Yeah, there you go. ShareEconomyCPA.com. Yes, so, we'll talk more about things like always. And March is right around the corner, and I'll be back from Cuba. Unless, something, God forbid, happens over there. They won't allow me to come back. We might have the new travel ban will be back on effect.
Yeah.
Derek, thank you so much. You know,
Yeah, for sure. Thank you.
like always, man. And guys, thank you so much for being part of this. You know, no, take me with you. Hey, come on over. Hopefully I'll be able to. I don't know if I'll be able to do this triathlon. My body's saying no, you're not. And thank you guys one more time. So, all right.
All right. Bye.